Let's, though, start with a top-down look at global markets. And for that, Peter McGuire is joining us from XM. Peter, nice to see you there. Good Monday morning to you. Give us your rundown of the jobs data, the session that was on Wall Street, and how markets are digesting what will be, yet again, a likely aggressive move coming from the Fed.
Good morning, Nadine. Yes, I certainly think it was underwhelming. I'm just seeing, 263,000 positions, looking for around about 315 for that non-farm payroll on Friday. So that was a sour note. That underwhelming really hit the markets hard. You had yields go. In the last week, we've gone from about 3.6 nearly to 4% on that 10-year. So that's taken the shine. And the other side, of course, is you've had a US dollar that's continued a little bit more of an uptick, approaching that 113 handle.
Yeah.
Dow sold off heavily. Sorry, over to you.
No, I was going to say that US dollar. Let's talk about that because it's putting a lot of pressure on, a lot of economies, emerging markets, developing economies in particular, as they look to repay their debt in US dollars. And then you add, this production cut coming from OPEC. It really sort of casts a pall over the fortunes of these developing countries and economies.
Yes, it absolutely does. I mean, you've got the yen now sitting back above 145 at about a 145.40 handle. And we know that the intervention from the Japanese central bank will be probably game on this week. So there's the first part. You've got a euro sitting at approaching that 96. I mean, it's 97 and a third. So let's just see if that momentum is going to be continual washout. We're not doing much good. The old Aussie peso at 63.50. Probably got a 5 in front of it by the end of the month. I won't be surprised. So, yeah, there's a lot of pressure in your good homeland, the 1.3750 for the loonie.
Did you call it the Australian peso, Peter?
I certainly did, Nadine.
Oh, my goodness.
Yeah, well, you're sitting at 63.50. It was only a matter of a couple of months ago, and we were thinking, that's 75. So it's been totally washed out. And we're worrying about the position as far as China, what's happening with their property sector, and where the old Aussie trades from here. We need that China market to be strong. And what's going to be the midpoint? We're at 67.50 on our market. I'm not sure what it is in the last couple of minutes since the open, but you've called a few that's, our sea of red. We're halfway between 75 and 6,000. So where do we trend over the next couple of months leading into Christmas?
It is a big question, and Christmas is upon us. So, Peter, we kind of glossed over that production cut coming from the OPEC Plus. What do you make of it with your deep experience in oil markets?
It's very, very intriguing, Nadine. I mean, you've obviously got a big power base that we're seeing develop or really bring front of mind for the consumer out there, the alignment with Russia, certainly with the Saudis, OPEC Plus, and how they can say, well, we need to see higher prices. We've seen a $10 jump in the price of crude over the last week. We've got WTI at 92.5, and you're approaching $100 a barrel at 97, well, just on $98 for Brent. So if it goes back around that 100 to 105, 110, then that's where the producers want. They want to really ramp up, and they're getting paid in US dollars. So it's a good time to be a producer and not a great time for a consumer, and the inflation story is very harrowing.
Yes, and we get a read on inflation coming from the U.S. later this week. What are your expectations? It has the potential to be one of those buy the rumors, sell the facts scenarios, bad news, good news. There's just so many ways that you can sort of talk about it before the actual event.
Well, exactly right. It's how you cook it. And I think that at the moment, a lot of traders are just sitting here. They're not going to be surprised. I'm not going to be surprised for a surprise. So if it's worse than what we expect, then that's really going to send, I think, gyrations across equity markets and the whole storyline. So I don't want to call it yet because it's too easy to get wrong. And, I just need to wait and see how it drops. But I'm not going to be surprised if it's worse than what we expect. And that's the story moving forward. So I'm sure the Fed's got a 0.75 basis point hike baked in for November.
As far as the local equity market goes, Peter, I mean, I've been off for a bit of a week and a bit, and we are now watching the XJO sitting at 6,762 at this very moment. What do you make of sort of where we're sitting in this local market, equity market technically?
Well, yeah, I mean, you're well off those highs that you experienced 6 months ago in April. We're all understanding that. We've had resistance at about that 64.50 sort of number. So if it breaks that and you see a continual downtick, then you're probably 6,000's got to be your handle. So we're just waiting to see how it all rolls over the inflation story, what central banks are prepared to do, and the geopolitical tensions. North Korea and the firing missiles, what's going on with Crimea and naturally, or Ukraine and Russia. There's a lot of very sticky subject matter at the moment, Nadine, that's causing much concern both domestically for our market and confidence, and on the global scene. Wow, it's game on.